Last year already I had the chance to talk about it and raise awareness with that regard. Let's try to work on this here. And we came up with a statement that we have a trend of increasing outbreak frequency of epidemic outbreaks, and not only a increasing number of events, but also a increasing severity of those events. And the impact on the hospitality industry is just that people don't like to travel to destinations where an ongoing epidemic outbreak is happening. So that can lead to drop in occupancies and finally to losses in revenue. So today I would like to give you an overview and go a bit deeper into details. What is the background? Why is this happening? And you see here what's happening in the last 5 years in the world, and especially in Latin America, in the Americas. And the main and the most severe event is still in Africa and Central Africa and DRC, where we have Ebola. But this is not the only event happening in the world. We have a lot of events when it comes to Latin America and Americas. For instance, we have Zika, we have dengue fever, we have chikungunya, and we are talking about measles. And all in all, if you look at this map, we can just confirm that we have on average 200 outbreaks a year, and 5 of them are new. But let's have a deeper look of Latin America, of the Americas. Dengue fever here, that is something where we have concerns. And we had, luckily, a pretty quiet year last year and 2017, but now it again develops an increasing number of fatalities due to dengue fever. And if you look at this chart, it seems to be that there is a kind of a pattern where we have every 2 or 3 years an outbreak due to dengue fever. Another issue, measles. You know, surprisingly, 2 years, 5 years ago, no one would have an issue or a problem with measles, but now we are talking about really epidemic with regard to measles. So according to a worldwide perspective, the WHO just stated that in the first 2 quarters of 2019, the number of cases of measles worldwide is 3 times higher than the same period last year. But even worse, even though on a lower level, if we look at the Americas region and cases of measles, the number of cases is actually 7 times higher than last year. So the majority of those cases is still in Africa, but it's surprising for the Western world. Vaccination is available, but you have the choice to get vaccinated, and there is some fear, and people decide not to get vaccinated or vaccinate their kids, and that is actually the result here. By the way, that's a global issue. Zika, I think that is something you already are aware of. We had a lot of losses here with Zika just for the hospitality industry, up to 9 billion. But now, fortunately, this outbreak seems to be over, so we don't have losses or fatalities seen this year. But never forget, the mosquito actually that transmits the virus, the Zika virus, it's the same as we have for dengue fever and chikungunya. So it's still there, the mosquito. We have to be aware of that. So what are the driving factors here actually? Also last year I highlighted some population growth, different land use, civil conflicts, mobility. If we talk about those issues, that is mostly in a matter of importing and exporting viruses, so new contact to viruses, and so that creates an outbreak. But this year I would really highlight the climate change as, if not the main driver on a global perspective for increasing risk of epidemic outbreaks. And I have to say, we as Munich Re, we have a lot of data when it comes to data from natural catastrophes and from climate change, because just by the way, we as Munich Re, our losses we pay to our clients are mostly coming from those natural disasters. So we have a huge unit analyzing those data, and we know that there is a correlation between those outbreaks, or the epidemic outbreaks, and natural catastrophes. So just last year we had 160 billion losses, insured or not insured, on a global perspective, and you see it's pretty colorful, and we had everything worldwide, and also in Latin America and North America. We had hurricanes, we had wildfire, we had floods and droughts down there in Argentina, and all that can lead finally to those epidemic outbreaks. And we can confirm out of those numbers that, what I said, that we have a lot of correlation between those events. So similar to what we did for epidemic outbreak, here's a chart where you can see the development of number of natural catastrophes by peril. And it's easy to say also here, it's a trend of increasing number of perils. Differently by peril, it is pretty stable in numbers when it comes to earthquakes, but the others, tropic storm and floods and droughts, they are all increasing in numbers. Just compare 1980 and 2018, the number now is just 4 times higher in events than 38 years ago. And when we have a look at a chart, what actually causes this in losses, overall losses, you remember I said 160 billion US dollars last year. I have to say that was actually a good year, because 2 years ago we had overall losses of 350 US dollars just in 1 year. And there's also a trend of those peak years. See, 2005, that was the first year where we had losses more than 200 billion, and from that time on we just had 2 years with more than 300, and 1 year close to that number. So don't panic. I mean, we are aware of that, and the public sector is also aware of that. And the question is, what can we do against that and mitigate those impact? So when it comes to the public sector, they are also aware, and they recognize that there is a correlation between natural catastrophes and epidemic events. And they just issued, as an example for the Maldives, a bond where they combine both risks from natural catastrophes and epidemic events. Question is, what can we do? Because this is our responsibility as a reinsurance company to develop new products if there's a new risk out there. So what we do is we focus on the revenue and the balance sheet, on your revenues, on your balance sheet, to protect them and to stabilize them. So what does that mean? It's pretty simple. Imagine there's an outbreak or it's a natural catastrophe out there nearby your hotel, and you just face losses in revenue due to drop in occupancy, for example, but you don't have physical damage, for example. This is covered by a business interruption policy covering physical damage. Here we are talking about non-physical damage, just the event and the tourists don't show up. We have two solutions for that. The first thing is, if you see the black curve as a revenue curve, if after an event it drops, we would just compensate the actual loss coming out from those epidemic events, like business interruption insurance as a basis. The second thing we have, it's even simpler when it comes to natural catastrophes. We don't need any proof of loss there. We just offer here a parametric solution, which means you get a predefined amount for compensation in the event that something happens in your area, and the amount is just depending on the distance where the event is and to your hotel and the severity of that event. So that was, in a nutshell, what we can do, what the public sector does, and what's currently ongoing. So again, don't panic, but we cannot avoid to these events. But what we can do is at least mitigate the impact for your hotel business by providing those financial solutions. So thank you. If you have questions, happy to answer.
Bueno, muchísimas gracias. Vielen Dank.